All right, let's recap Friday, June 26th price action. Full transparency, the account is down like 1100 after I took two trades. They're both losses. Let's get into it. Why I took what I took, what I probably shouldn't have done, and hopefully you guys learned something from this. So, looking at the time, right, this is like 9:28 Central. When market opened, we had swept London highs, shot up pretty aggressively. There's a lot of liquidity to the top. So I'm thinking, okay, well, we're showing a lot of bullish momentum. I think we can go higher. So I get in off this 1 minute fair value gap and hoping to go higher. If you as you guys can see though, I do have trendline liquidity marked below as well, which you don't want conflicting draws because this is exactly what happens. I'm expecting us to go higher, to go take out the liquidity up at the top, but we also have been building trendline liquidity at the bottom. So, long story short, I sit here and get chopped around for, let me see, I entered the trade at, let me tell you right now, I entered the trade at 9:28 Central, and I got that at 9:53 Central. So, what is that? You know, 20 plus minutes of really just getting chopped around. It was a low size, and to be honest, this wasn't the trade that got me down, the majority of money. This was like a small loss. I think it was, I don't know what it ended up being, 10%. I don't know. It was small. So this was the first trade that I took going long that I lost. Right. I'm gonna talk about the second trade. It hasn't popped up yet, but the second trade I took is now. I see that again. We're building even more trendline liquidity. So I'm thinking, okay, we're gonna take that out. So now I'm bearish. I flip my bias back to going down because I see that we're struggling here to maintain momentum to the upside. So I take another trade and I'm bearish. And here's the problem with the second trade. And I'm pretty sure I've talked about this in previous videos. So this could have been 100% avoidable, but it's my fault. It is what it is. We were within a 15-minute bullish fair value gap. Okay. I was trying to front run the gap with the understanding that there was this trend line under it that we can go run through. That is so risky because the 15-minute candle never closed under the 15-minute gap. What ends up happening is I think at one point I'm up like 10% on the contract, and that was the most amount I was up. It was chopping around for a while, and I was in this trade from 9:53 Central to 10:29 Central. So it was kind of a long trade for me. And I'm sitting here waiting, thinking, okay, like we're chopping, we're chopping, we're chopping. Like I think we can go lower, but again, we never inversed the 15-minute gap on the 15-minute time frame. What ends up happening is the 15-minute time frame gap ends up holding. I get stopped out and price shoots up. And ironically, by the end of the day, price starts dumping, which is what I originally wanted in that second trade. And it dumped aggressively. I'm talking like $10 on SPY. So that's how I'm down. Lesson is if there are two conflicting draws, it's better not just to not trade or just wait until momentum is really going in the favor. Obviously, the first trade I took, I was okay. The 1 minute of small size, which I think that was an okay trade. The second trade, I went really heavy, thinking, okay, we're about to go run these lows, run this liquidity, and obviously that did not happen, and I got clapped for it. Hope you guys learned something. The challenge is still alive, but we're down. All right, well, that was the recap. Just wanted to keep transparency, keep you guys updated what happened. Hope you guys learned something. Later.